On this video for the Tennessee Master Row Crop Producer, we'll be discussing the 2021 Ark County or PLC sign-up decision. I'm Aaron Smith, an associate professor in the Department of Agriculture and Resource Economics. So when we look at the decision, just some general notes before we get into how some of the programs work and how you would end up making a decision as to which program would work for your individual farms. The sign-up deadline for the 2021 crop year is March 15th. So you will need to get in touch with your local FSA office and set up a time or determine the best way to end up completing the forms. Given the challenging circumstances, some counties may be accessible, others may not. So you do want to end up calling ahead and determine the rules and restrictions that may be present in your county due to COVID-19. When we talk about the actual program selection, it has changed a little bit from the last time we did this. If you think back to the initial time when ARC and PLC was introduced, the 2014 Farm Bill, it was for the life of the Farm Bill, so you only had to do the decision once in terms of which program you're going to elect. When we signed the 2018 Farm Bill, we ended up seeing that being modified so that we ended up getting an initial choice for the 2019 and 2020 crops. And now when we move through 2021 through 2023, we're going to end up having an annual sign up or program selection so that you can end up selecting, the program that you think will end up yielding the best payments in terms of your individual operation. So it is a positive, but it does require an annual sign up rather than in the past when it was for multiple years. It is important to note that given current circumstances, we've obviously seen a tremendous rise in row crop prices since August of 2020. We've added substantial amounts to corn, cotton, soybean, and wheat prices. So again, that's changed kind of where we're at right now currently, obviously from a profitability standpoint, which is great. But when we look out, we do want to end up factoring in this changed price environment when we're looking at our projections. Now, obviously, when we're talking about the 2021 crop and the marketing year that follows the harvest, there is a substantial uncertainty that is out there because we're talking about trying to come up with reasonable estimates or ranges that go out over a year from today's date in terms of what that price environment might end up looking at. And again, when we're looking at county level yields, we have the data for historical yields, but we don't know what the 2021 crop year is going to bring. So it does bring a tremendous amount of uncertainty. One thing that is, a reasonable estimate right now is we're very likely to have much lower payments through both of these programs. And there will be several counties that we might not get any program payments for certain commodity bases, just because of what we've seen in terms of, the revenue side of the equation for Ark County and the higher price environment for PLC. And so one other thing that we always want to keep in mind are these payment timing. It is always a 1-year delay. So for the 2021 crop year, those payments will be received by farmers after October 1st, 2022. I'm going to talk today about the program in general, provide some estimates where we're kind of seeing price expectations moving forward. But if you do want to do a deeper dive into your individual county or into your individual farms, I always encourage people to work with qualified professionals. So obviously we have UT Extension personnel, county agents, area farm management specialists that are willing to work with producers to look at the numbers that would potentially sway them in one direction or the other for their individual farms. But there are other qualified professionals out there. We have some great crop insurance agents that will do a lot of estimates for people, bankers as well. And so, rely on those people that can provide you that qualified advice in terms of which program may be more beneficial for your individual operation. So jumping right into it, I'm not going to do a deep dive on any of these programs. I'm just going to kind of give a scan level just so we understand kind of what the mechanisms are to end up triggering a payment. So the first one is price loss coverage, or PLC. PLC payment is triggered if the national marketing year average price is less than the effective reference price. We'll talk about where those are for our key commodities. But the key point I want to make here is the national marketing year average price. It does not matter the price that you receive for your commodities. It is the price that is put out by the USDA to represent what the average farm price was for that crop year. So that's what's going to really trigger a price or a payment under PLC. But for your individual farms, it's going to be determined by the base acres and what the PLC payment yields for each farm are. Those are fixed, so those aren't gonna move. So we have to take those as given. You just have to pull those out of your records at FSA, look and see what your base acres are, what your yields are. Those will remain the same. Those aren't going to change. PLC, again, it covers a price decline from the effective reference price down to the commodity loan rate. So again, it covers a deeper loss potentially than Arc County. A larger price decline would equal larger price payments. Again, with the background that we are in a higher price environment, so we're not looking at potentially maybe having a price trigger unless we see a dramatic reversal in where prices have been over the last 6 months. But again, we have almost 2 years to work through this, about a year and a half. The other factor that does play into this decision, if you are going to purchase supplemental coverage crop insurance, you can do that with PLC. You can't end up doing that with ARC. So for those of you that use that product, or you want to analyze it with your crop insurance agent, that is something that can maybe tip the scales in favor of PLC compared to Arc County. But we haven't seen historically in Tennessee a huge amount of use for SCO. So again, that's something that is just an individual choice, but you do want to work with your crop insurance agent to see if it's right for you. In terms of just a real quick basic example of how PLC works, you determine a payment rate multiplied by the individual farm's FSA payment yield, multiplied by 85%, and that's what your payment per base acre would end up being. So quick example of this, if we have a marketing year average price, this is national marketing year average price determined by the USDA. If it's below that effective reference price for corn, it's $3.70. The payment rate would be 10 cents a bushel. I'm assuming a 35 bushel payment yield, and then it covers 85% of base acres. So it'd just be that 10 cents multiplied by 135 multiplied by 85 would give you 1148 payment per base acre. Now, again, when we talk about these effective reference prices, they're really important because if we think that the marketing year average price for the 2021 crop year is going to be above that, there will not be a PLC payment triggered. So just to kind of illustrate this, when you have a marketing year average price that's greater than 370, there is no payment. And when you end up having it less than that, is just the difference for the payment rate is just the difference between 370 and where the national marketing year average price is. We look at agricultural risk coverage county. I'm not going to talk about the individual version of agricultural risk coverage. There are two options on that. But again, the agricultural individual component, one, we don't have high utilization in Tennessee, and there is a little bit more complexity in doing the analysis on that. So I'm going to keep today specific to Arc County versus PLC in terms of your decision. So the difference between Arc County and PLC, the primary difference is PLC is 100% price triggered. You have to have that price decline in order to trigger a payment. Agricultural risk coverage works more similar to crop insurance. It's a little bit different, but that's a close parallel. So again, we are looking at revenue, specifically county revenue for a commodity base. And if that crop year revenue falls below a revenue guarantee, that's when you would end up potentially triggering a payment under Arc County. And so again, it's important to determine what prices we are using. Again, it's those national marketing area prices that we're using, and we're using county yield. So it does not matter what happens on your farm for Arc County. It is also a shallow loss program, so it does only cover a maximum of 10%. So if you are more concerned with severe price declines, PLC is probably going to be the program of choice. It covers a deeper loss in general. Again, given where we're at right now in the current price environment, prices are reasonably good as of January 2021. So again, we factor that into where we think prices are going, but if that is a major concern, that could tip the scales in favor of PLC. Arc County payments are still determined by base acres. For either one of these programs, it does not matter what you're planting on your farms. It only matters what your base acres are for that FSA farm. And again, the supplemental coverage crop insurance option isn't available if you enroll in ARC. So just quickly, real basics of how agricultural risk coverage county works. Simple example, we've calculated the average or Olympic average yield and the Olympic average price. But if you want to do that on your own, I mean, you basically take the prices from the past 5 years, throughout the high and low, take an average of the three. That's your Olympic averaging process. So in this example, if we'd have benchmark county revenue of $430 an acre. So that's 48 bushels per acre times $8.95 per bushel for soybeans. And you get a revenue guarantee up to 86%, so $369 per acre, but you cannot exceed that $43 10% shallow loss. So again, if you do have that, that's where your revenue guarantee is set. Then you look at what the actual county revenue, and this will determine whether a payment's triggered. So if after the end of the 2021 crop marketing year, if we have a county average of 30 bushels per acre and a marketing year average price of $10.90, that'd give us $327 an acre. Actual county revenue is less than the guarantee, so it would end up triggering a payment. Payment rate would be $42 per acre. Again, you multiply that by 85% and it would give you $36 per base acre. So that's the basics of how the program works. And so, the two key takeaways that I do want to point out on this is obviously PLC is 100% price triggered. That's what's going to determine whether you get a payment. Agriculture risk coverage is a combination of price and what goes on in your county. Neither program are going to be influenced based on what happens with the 2021 crop production in terms of what the payment amount would end up being. This is where Tennessee is a little bit unique from some areas of the country. Our base acres and our planted acres do not match up as well as some other regions of the country. So you can see when we look across commodities, corn, this is the 2020 planted versus the base acres that we have. When we look at our base acres, just over 900,000, where we planted 870. The big difference is really in soybeans. When you look at 781,000 base acres compared to 1.6 million acres in planting. So there will be a substantial number of soybean acres planted that could potentially end up receiving payments based on other commodity bases. And so again, it's important when you're looking at your individual farm circumstances to know what the base acres are on your farm, because that's what you'll be paid on. So we look at where prices are right now. I mentioned this is one of the key determinants is what are your expectations or projections in terms of prices when we look for the 2021 crop marketing year. The effective reference prices has been set. So when we look at the prices for PLC 370, 840, seed cotton at 36.70, wheat at 550, and sorghum at 395. Those are locked in. So we've already determined what those prices are in terms of the effective reference price. So again, if you think that marketing your average price is going to be higher than that, we wouldn't get any PLC payments. In terms of the 2021 Arc County benchmark prices, the only one that's different from the effective reference price is soybeans at $8.95. So again, a little bit higher price for soybeans relative to where the effective reference price is. I put in there projected marketing year prices for 2021, again, with the full recognition that we're a substantially long way away from having firm price estimates on that. But we have seen a rising price environment over the last 6 months. That's increased our current prices and also has, lend some very valid support to increasing our price expectations into the 2021 crop year. So again, when we look at this, current prices for corn projected at 407, that's lower than where they are right now. But again, with the uncertainty, it is maybe a little bit on the lower side. Soybeans 1041, seed cotton 3457, wheat 510, and sorghum at 417. I put the price trend in there just because, as we see these prices rise, expected futures prices are going to continue up as well. And then the last column on this table shows the current harvest prices, right? So we look at the futures harvest contract price. It has nothing to do with the program. It's just a reference to where current prices are relative to the effective reference prices and where marketing year average prices are currently. One thing that I will point out is I did mention there's a lot of price uncertainty out there, but there are some things that have moved in favor, particularly for corn and soybeans in terms of supply and demand, where it is reasonable to think that we will get some pretty strong support from the current circumstances that we're seeing in those commodities, where I'm not saying it's unlikely, but the probability is going down that we will see prices dip below those effective reference prices due to tight stocks, good export demand. There's a lot of positives on the row crop side of things that has been manifested in prices. You know, we can end up having a bumper crop that would potentially change that. But right now, we're looking at tighter stocks to use globally and nationally that would support prices. You know, cotton and wheat are a little bit less certain in that regard. So again, there might be a little bit more downside risk on those two commodities over the next 18 months, 18 to 24 months in terms of if we do get really solid production. You know, we are still at elevated stocks for cotton and wheat, and that would potentially end up decreasing prices. But again, we all know that prices in general are going to somewhat move together. So we look at corn prices relative to the effective reference price. I'm just plotting here where we've been in terms of marking your average price since 2014. And you can see where we're at right now. There will not be a PLC payment for corn in 2020. And we don't have projections on here for 2021, but based on where we are in terms of prices, you know, it seems like we will be above that dotted line of 370. So that would definitely lean towards Arc County for most producers. It's not guaranteed that there would be a payment under that program as well, but you would end up potentially being able to trigger it from a yield loss as well, not just a price decline. I always like to put in kind of that volatility as well, so you can see the table on the right hand side shows the December futures the closing price, the min and the max from January until when the contract goes off the board for each of the years from 2014 up until the current one right now, which obviously hasn't completed yet. And then it kind of shows the difference. So you can see back in 2014, we had a $1.92 move on the futures contract from January 1 until when it came off the board. 2017 had the tightest trading range at 79 cents. But we can expect to see, you know, that range end up expanding for 2021. It could be to the upside. It might end up being to the upside and to the downside. So again, just gives you an indication of where our current price expectations are. Switch it over to soybeans. This shows the same thing. We've never actually triggered a payment for PLC based on soybean marking your average prices. We got close in 2018. And you can think of all the things that went on in that year in terms of the trade disruption with China. So I really don't see a strong likelihood of getting a payment under PLC. So if you have PLC or if you have soybean base acres, likely PLC is not going to be the most likely program to trigger a payment. It's not to say Arc County will trigger a payment, but it should have a greater probability than PLC for most circumstances. Again, you see the ranges of the different price offerings that we've ended up seeing over time. You can factor that into what your price expectations are moving forward. When we look at wheat, again, wheat's been one where it's been pretty solid PLC in terms of signing up those base acres. We've triggered payments in all except for 2014 year. You can see that 550 reference price relative to the blue line. See where we are in terms of the July futures contract right now. Again, we've seen prices come up, but our current projection is that there would still be a PLC payment potentially. Now, if we continue to see prices rally into the summer and into the fall next year, you know, that could end up changing. But you can make a much easier argument that we could see a payment under PLC or cotton than you can in corn and soybeans under the current market conditions. When we look at upland cotton, again, this is one where it gets a little tricky, and I don't want to get too far into the weeds here, but it's not based on lint prices, it's based on seed cotton prices. So it's a combination of cotton seed and lint prices, which is shown in the graph below, but it does obviously have a strong correlation to where cotton prices are. And so we've seen it creep up, but again, where we're projected at right now, the seed cotton price would still trigger a PLC payment. So again, that one would be one where I would probably lean a little bit closer to PLC than Arc County under the current circumstances. But again, with the caveat that if our expectation is for these prices to continue to increase through the remainder of 2021, that would negate potentially any payment under PLC and might make Arc County the more attractive choice. So again, a lot of it is dependent on what's going on for PLC based on what your price expectations are for the 2020 year. So kind of the decision-making process, just to kind of boil it down into kind of the things that you need to think through. The first one is obvious. What are your price expectations? And again, when I say price expectations, I mean national marketing or average prices. Obviously, the futures market, cash prices can provide some guidance. But if we're talking about what's going to trigger a payment, it's going to be that national marketing average prices. So if you think that the prices are going to be above that effective reference price, then probably it's going to lean you towards signing up your base acres for Arc County. If you think that there is a likelihood that we will have prices below those effective reference prices, then maybe it might lean you towards PLC. Now, again, it's important, you don't have to put all commodities in one program. So you could pick Arc County for corn and soybeans, and you could pick PLC for seed cotton base and wheat base. So again, you do have a little bit of flexibility there in terms of your program selection. I mentioned supplemental coverage option. If you're going to purchase that, that is going to definitely end up pushing you into PLC. But again, weighing that as a potential benefit of going into that product versus Arc County might move the needle for some people. One that I haven't really talked a lot about, but is important, is what are your county, Arc County revenue guarantees for the commodity base? And this is where a deeper dive is necessary. You really do have to look at individual counties, because even just within Tennessee, we have a fair amount of variability in what those revenue guarantees are set at. And so again, there could be a higher likelihood for numerous counties to trigger a payment. The other one, and this one again, is nobody has a crystal ball. I'm not saying that it's easy to end up doing any of these projections or expectations, but you know, if you've had a series of really good yields, you know, that's going to bump up your revenue guarantee for Arc County. And then when you look at forecasting out, are there concerns in your county in terms of potentially having lower production on average for the 2021 year? You could factor that into your analysis as well. But that one's a little tricky to really get a good handle on, because we really don't know and won't know by the time sign-up ends what we're dealing with in terms of growing conditions. So we do have this simple spreadsheet decision aid that we've put together, and you know, if you email me, we're more than happy to share the individual numbers for your county, and you can manipulate you know, what your price expectations and what your county yield expectations are, plus your PLC payment rate. This one is for Gibson County, Tennessee. Essentially, I put the base acres in there. You can see that the base acres by commodity. It doesn't factor into the calculation. I just put them in there to kind of give an idea of what the base acreage allocation is for the county. Again, you have to look at your very specific farm to end up determining what your base acres are. But then we look at what the Arc County revenue guarantee is going to end up being. That's already been calculated for 2021. And we look at that, and that will vary tremendously by counties, particularly as you move west to east. But even within the geography, you will end up seeing a pretty big variation based on what the historic county revenue or county yields has ended up looking like. So based on that Arc County revenue guarantee, we look at what the current projected marketing year price is. You can change those. And then if you change the market price, it'll tell you what the county trigger yield would be. So if the yield is below, I'll use corn example, 154, that would trigger a payment if we expected a 407 marketing year price. And so again, you can look at it from that standpoint, or you can go the other direction. You can look at, okay, well, if I think we're going to have 170 bushel per acre corn yield, then the trigger price would be 368. So that would have to end up falling down to 368 if we had 170 bushel per acre yield in order to trigger a payment. And so again, this is just a way to end up kind of comparing under what circumstances would an Arc County payment be triggered. And then obviously when we're looking at that effective reference price, you know, that would end up being our comparison point for when PLC might end up kicking in, right? Because you could have a set of circumstances where you could get a PLC payment for a commodity, but maybe the Arc County payment might be a little bit higher or vice versa. And that would tip the scales in one direction or the other. So just kind of summarize, I do this for each individual county. And then I kind of just indicate what the program preference is right now, with the full acknowledgement that markets are continually changing. And right now, given the trend you know, you can make a valid argument based on projecting wheat prices higher than what we've got in this spreadsheet that Arc County might be a beneficial choice. Cotton is moving that direction. I don't think it's quite there yet in terms of where our price expectations are. But the longer we see this rally, or more robust we see this rally in prices, it will end up changing what our optimal program would end up being. So we update these on a monthly basis. Now, again, we only have until March 15th to do the sign up. So we will have to make a decision reasonably quickly. This is where we're seeing kind of payments as of right now. But the two right now that I think are the ones that we kind of we'll see how the next month and a half play out, are going to be the seed cotton and the wheat. Soybeans, corn, and grain sorghum are pretty solidly Arc County, unless we see something unforeseen change in our price expectations in the next month and a half. So just in concluding remarks, you know, 2021 crop prices are highly uncertain. It's something where it's a challenge when you're trying to project prices out 18 months from now. But based on current market conditions, you know, we are reasonably comfortable in saying that we're not gonna, right now as we see it, have a PLC payment for corn and soybeans. It seems there would have to be a change in market direction to end up getting market year average prices below that 370 range and that 840. That would be pretty dramatic. You know, cotton and wheat right now, it's moving in the direction of Arc County, but at the same time right now, PLC is where we're projecting those two right now. You know, one of the big ones that is probably a little bit different, these changes have probably kind of flipped some of your program selection based on what you did for the 2019 and 20 crop years. And a lot of that is just a change in the direction of prices. The big thing that I always tell people is we don't want to leave money on the table. All we can do is do the best estimates that we can. Go in, communicate with your FSA office to make sure that you get signed up before March 15th, so that you can get enrolled in these programs, because it will potentially end up getting payments. There's no guarantee. Payment could be zero, but don't leave money on the table by missing the sign up. With that, that concludes this video. My contact information is on there. If you do want any additional information or an update for your individual county, you can always end up emailing me at the email address shown below. Thank you for your attention.